Hello traders, Gary Wagner here. Trending markets on Friday. Happy Aloha Friday, as we say on the islands. Just before 10 o'clock in Honolulu, 4 o'clock in New York. Markets are still trading, but open roughly for about an hour before closing for the week. As we look at the equities markets here in the United States, Dow Jones Industrial Average is up nominally on the day and up moderately on the week. When we take a look at our daily chart, the one thing that really stands out more than anything else on a daily chart is the fact that we have seen this series from this recent low here, series of really higher lows. Now, we are getting a contracting market because when we look at these last 2 days, you can see the range has definitely contracted quite a bit, but a case can be made for a series of higher lows, and really we've got pretty much a flat top. So we've got some real resistance in the market right around, 16,600, and in terms of support, that tends to be rising. And that's the information we can derive, of course, off of a daily chart. Now, weekly chart, we can see that the move this week was fairly strong, at least labeled as a moderate move, considering it traded at a low of just at around 16,000 at a high of around 16,650. You can see that we truly had over a 550 point range on the week, closing without a question of a doubt in essence around the midpoint of the prior week, if we just look at where this current print is, and then of course compare it to the range of last week. Now, this is all following a dramatic sell-off and a historical low. And what I mean by a historical low, it's the steepest of all corrections that we have witnessed in this market over the last couple of years. Absolutely a 10% correction. The question is that correction over? Are we forming a base here and moving back up? Or are we simply consolidating in the market before making another low? And that, of course, is the $64,000 question. It's something we've been exploring throughout the last couple of trading weeks. And traders, I believe that we're forming a base to move higher. That is my initial conclusion. That's how I've looked and viewed at this market. And as you know, that was based upon the identification of a single candle type that seems to have a huge frequency of occurrence at the conclusion of these shallow corrections. Here, we've got one here. We've got, to a degree, one here. You do have that tail. We certainly have one here. And this is the most extended of all of those. Very, very small body, long tail, very much like a hammer in terms of the candlestick identification type. However, the key is that in all of these instances, that hammer candle was followed by a dynamic up move the following week. Here, dynamic up move the following week. Here, as well as here. So we had the first component of this particular correction easily identifiable, but it's been these last 2 trading weeks that has me perplexed in terms of whether or not we're going to see this particular pattern unfold in the way that we have in the past. Because once we get any kind of a confirmation of that, the beautiful thing about that is that we are still at a level, when you consider where the market is right now in this area, that if in fact we have witnessed a conclusion to this correction, then we've got these record highs up here, a very, very nice 10% sell-off, and a move back to that type of trading is absolutely going to take us to another high. In other words, if we've weathered a correction and we're back in rally mode, we're certainly looking at a bull trend, then we're going to make a new high based on the technicals. That is why I've been hesitant in actually initiating a position. I think there's plenty of time, and I think that once we do get confirmation, we've got tremendous room on the upside. Now, we do have a trade going this week. We are short crude oil. And when we look at our particular market today, it is off by about 2.5%. Trading off about $1.15 per barrel. Now, that is after selling off from these highs here at 48 and really these highs here at 49. The market's still off. We did enter the market from a short position, but we're in at around 44.25 if I'm correct. Our stop is up above 46.50. And so, as we talked about yesterday, my sense was I wasn't really worried about getting stopped out because I have seen this market really act in this way before. You get a tremendous sell-off, you get a nice little spurt, which I believe is simply a short covering rally, and then a continuation on to the downside. That's what I think that we're looking at here. Tremendous move down. You had this incredible surge back up. Look at what the market did over a 3-day period. Just a tremendous move to the upside as it went from $38 to $48 per barrel. You're looking at about a 20% move over 3 days in the market. Market is now consolidating. We can see that. In this case, we've almost got a flat bottom and a descending top. And I do believe our break is going to be from the downside. My recommendation is obviously to maintain our current short position, maintain our stop right where it is. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Monday for another daily update and review. Bye-bye.